This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. Welcome to Bazaar Morning Call. You're joining us live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia. With me are Nigel and Rima. Well, folks, good morning. It's the last day of what has been a really volatile week for the market. Struggling to hold on to that 19,500 mark.
But it's Friday.
So the mood is upbeat for us because it's a Friday, but even the global mood is fairly upbeat.
Yeah, it is fairly upbeat. So, lots to talk about, right? I mean, and so many earnings, so much data. So let's get straight to it. The big question really is, will this 19,500 mark, will it get conquered? Because that's been a bit of a hurdle for the market through the course of the week. Give and take everything, it's been sort of hard to get above that resistance zone. So let's see what happens today. Now, there was large selling from domestic investors yesterday in the cash market. So you had DIs sell about 1,200 odd crores, while FIIs bought 2,237 crores. So I guess that neutralized the DI selling. But just keep that on board, that after a while, you've seen such a large chunk go out from DIIs. Now, global cues are very strong, as Rima was also pointing out. The Nasdaq was up 1.5% yesterday. And once again, both CPI and the PPI data, the inflation print has cooled off substantially in the US. And that's aided a lot of the, global markets. The expectation that perhaps there'll just be one more rate hike and then that's it. For the week, if you look at it, the S&P 500 is up 2.5%. The Nasdaq has outperformed. It's up 3.5% this week. So all eyes are going to be on global markets later in the evening as well. It's an important day of earnings today for the US because you have JP Morgan, Wells Fargo, Citi, BlackRock all set to report their earnings. And talking about earnings back home as well, you have the tech stocks that continue to be in focus. Wipro's numbers were weaker than what the street was expecting. There was a fall in their revenues of almost 3%. So the street is not going to like that. And they've also deferred their compensation cycle. So, that's something that may perhaps spook the street this morning. Also keep an eye out on what's happening with the crude prices because they've hit a 3-month high after the easing of US inflation. So many things to talk about. I think, suffice to say that this 19,500 mark has become a bit of a hurdle. Not too sure if there are enough and more triggers to take it out.
But this morning, there are a lot of global indicators which are very bullish. For starters, the dollar index. The dollar index is eased below 100. So this is clearly a risk-on indicator. The two earnings which came out of the United States, one of them was PepsiCo and the other one was Delta Airlines. Now, early birds, but, these are indicators of the U.S. economy and very, very strong numbers. PepsiCo has seen 6 consecutive quarters of a double-digit price increase. But it's getting absorbed by the market. It's getting absorbed by the consumers. And PepsiCo has gone ahead and raised its estimates, its guidance. Even Delta Airlines, which has been a big beneficiary of the post-pandemic travel boom. They came out with their Q2 numbers, very solid, 19% top-line growth. For Q3, they're guiding for 11 to 14% growth, and full-year guidance has also been raised. These are indicators of the U.S. economy. Again, early birds. Today, we will get more numbers from the financial space. But, the numbers are looking quite solid, which indicates that the U.S. economy is still very much on a solid footing. For our own markets today, you've got numbers from Bandhan Bank. You have a few others like Just Dial, CCL products. But the big mid-cap number to track will be Bandhan Bank. And tomorrow, you've got D-Mart. But, Nigel, for the last couple of days, we've been making the point how the Nifty has been very much in this band of 19,300 to 19,500 on the way up. I think for the last 5 or 6 trading sessions, and this 19,500 is turning out to be a bit of a hurdle. We are getting there, but unable to conclusively conquer that mark. Look at the highs over the last couple of days.
Well, that's right. It seems that the Nifty is afraid of heights. And that height is at 19,500 odd mark. While for the Nifty Bank, it's around 45,000 odd. But the big point in terms of a global cue is the dollar index. That's the lowest we have seen in the last 15 months or so. And I think that's a big positive for all emerging markets. And since India has been standing out, but it's a good tailwind for us. The Nifty, struggling to hold on to 19,500. The Nifty Bank facing resistance at around 45,000. But the uptrend is very much on track till we hold on to that 19,000, 19,100 odd mark. If you're looking at yesterday's trading session, you'll see the Nifty came off the highs, the Nifty Bank came off the highs. But I want to understand whether or not the broader markets are in for some bit of more consolidation or maybe some bit of a pullback. Remember, stocks out there just went one way. But yesterday actually was a painful day for portfolios. The mid and the small cap indices were under pressure, and you had two stocks that were declining. for one stock that was advancing. But the point that I was making with regard to the 19,500 odd mark, in the last 5 out of 6 trading sessions, we have gone to those levels, but we are not able to hold on to that mark. The Nifty Bank as well. All the last few sessions, this week itself, we've almost gone to around that 45,000 odd, but we're coming off. Yesterday, we came over 400 points from those levels. What do the FIs do? After a while, they added short positions, close on 10,000 short positions, and I like that. You'll want more number of shorts in the system. If you get some bit of good news, the shorts will be forced to cover out. And just last week, the net long positions, that's the long minus the short positions, went to more than a lakh. The last time it happened was the early December, and then we saw the markets pull back. This time around as well, the markets are feeling some bit of pressure when the net long positions of the FIs go over 1 lakh. Now, after this short position that we have seen added, the net long positions has come down to around 86,000 contracts, which is pretty good news. And now they continue to remain net longs, but at least it's come down from around those mid-70s to around 69%. Two strikes were very active, the 19,500 call and 19,500 put, which brings us to the support zone. If the 19,500 put is being written, then 19,375 becomes the important first level of support. If there's a straddle in place at 19,500, then 19,300 to 19,375, very, very important in terms of a support zone. Resistance we have seen at around 19,550. On the Nifty Bank, well, the 45,000 call, well, that's been getting written. So on the upside, 45,000, 45,200, that's an important level. While on the downside, the 20 DMA comes in at around 44,380. That's an important support zone out there. The GIFT Nifty, the derived number is suggesting a 40-50 point gap up. Can we build on to that? Is today the day you go ahead and conquer that 19,500? Well, time will tell. Let's set ourselves up for a Super Friday.
Okay, Super Friday is here, so let's tell us what we've lined up for you in the first half an hour of the show. We'll get you updates from the markets across the globe, and Mixo Das of JP Morgan will join in to discuss the global trade setup. Later on, our research team will bring you CNBC-TV18's list of top stocks for the day. And at around 8:30 a.m., we'll do a fundamental stock analysis with Nishal Maheshwari of Centrum Broking.
All right, let's begin the day with some views. Before that, the Asian markets are also doing pretty well this morning. So just take one look at the Hong Kong market. It's up almost about 1% right now. So lots of green on the screen as we kickstart trade. On the equities front, we have Lawrence Belanco of CLSA who says that Wednesday's drop in the US dollar index reinforces our view that the US dollar formed a major peak in September 2022. Historically, he adds, a falling dollar has typically resulted in a strong performance from emerging markets. He notes that both the emerging market ETF and the emerging market bond ETF are on the cusp of confirming fresh breakout signals. In the US, Lawrence says the rotation trade into laggards continues. He adds Wednesday's trading range breakout in the Russell 2000 contrasts with the slowing upside momentum in the S&P 500.
Let's get you some money market views then. Lakshmanan V, a federal bank, says the US CPI inflation print softened to a 2-year low at 3%, leading to positive reactions from all major currencies against the US dollar, and the dollar index falling to a 15-month low. He says the rupee continued its winning streak for the 4th consecutive day, with the forward premium trading at a 2-week high and a 1-year implied yield rising to 1.75%. He expects the USD-INR pair to trade in a range of 81.78 to 82.35 against the dollar during the next few trading sessions.
Okay, well, on the bonds, Lakshmanan says that domestic bonds tracking the US markets rallied to 7.06% with a jump in volumes. He also says that short covering was seen in the market, and he adds that today's auction for the benchmark bond is expected to be well bid. He expects the 10-year benchmark bond yield to trade in a range of 7.02 to 7.12% in the next few sessions.
Well, we have a lot of stock-specific action to track for you. Get to that in just a wee bit from now. For the time being, let's run you through the top 10 lists that we'll be tracking for you. We're looking at Wipro, GMR Power. You have Angel One, Patanjali Foods, you're a CSB Bank, TTK Health, JBM Auto, and ONGC. All of them on positive news flow. On the flip side, Spark and Tata Metallics will be reacting to negative news flow overnight.
Okay, let's get in a global check then. U.S. markets, remember, had a solid finish yesterday. The Dow gained fractionally, but the S&P 500 climbed nearly 1% and the Nasdaq surged 1.5%. Over the last 2 days, the inflation print has been soft, the labor data has been strong, and the U.S. earnings, at least up until now, from the likes of PepsiCo and Delta Air have been very, very resilient and higher than what the street was anticipating. It's a good cocktail of macroeconomic indicators. Mixu Das, Asia equity strategist at JP Morgan, is with us on the show now. Mixu, everything's looking good, but so is the level on the indices now. The S&P 500, for instance, crossed that 4,500 mark yesterday and closed above it for the first time in 15 months. How would you view the setup on the U.S. markets, the equities, and where do you think it's headed?
Right. I think if you look at the U.S. market, right, there's two separate trades going on at this point. One is that this ongoing AI bubble where, the running joke is AI actually stands for all in. And then you have the other trade in the US market, which is around the macro. And here the inflation print remains the most important. The good thing or the good news has been so far that inflation on a year-on-year basis, headline inflation, has been falling all through this year since, really late last year. And that's been a key driver of upside in US equities. But the problem there is that the next print that comes out in August for the July CPI is probably going to start rising again. And that becomes a little bit more challenging environment for the Fed to start responding to. And I think that the next move for the market is going to start to price in further rate hikes from the Fed. And that is going to drive a more cautious tone in the rest of the US equity market starting from sometime in August. But in the very near term, I think that the momentum in this market is still very strong. Sentiment has become quite buoyant across our positioning metrics. It's starting to look a little stretched, but I think in the very near term, the momentum continues.
Okay, so the momentum is strong in the near term and sentiment is buoyant. Mixo, good morning and always great having you on the channel. So you're saying that the CPI print in the US from here on could perhaps start to spike a little bit, and that could put pressure on the Fed, perhaps going in for more rate hikes. So we're not done with rate hikes just yet. There's one more in this policy, and how many more are you expecting? And if they come through, then how should an equity investor in India respond to that? Because it's been great going for an Indian investor up until now.
Yeah, that's a very good question because, when we think about further Fed hikes, so we do have one more hike priced in for July in our official forecast. But the bias of our forecast is that there could be more. And if inflation proves to be more sticky, so if the headline year-on-year number starts to rise from July as we expect, and if the core inflation remains sticky around the 4.5, between 4.5 to 5%, then you'll probably need to see more hikes from the Fed. Fed is already starting to guide towards that. So several FOMC members who have spoken in recent days are talking about needing further hikes to bring inflation down. And if we start to move in that direction, that's where it becomes a bit more challenging for the US equity market. Now, coming to India, I would say that there are three big portions to the India trade right now, right? There's one in the very near term, maybe there's some toppy behavior in terms of cyclical tops. So earnings are a little bit toppy, but the valuations look quite toppy at 1.6, 1.7 standard deviations above average. That's kind of offset by what's happening from the structural perspective. And we've seen this in terms of foreign buying into the Indian market, right? All the structural positives are at this point well known. You got urbanization, you got digitalization, you got supply chain relocation, a growing bounty of savings within the domestic economy. And all of these things are long-term positive for the market. And foreign investors who have been, seeing little in terms of exciting opportunities elsewhere have been piling into the market. If you look at Asia ex Japan as a whole, foreign buying since April has been about $17 billion. And if you just look at India, foreign buying in that period has been $17 billion. So all of the foreign buying in the region has basically been going on in India, and the long-term opportunities there are being appreciated. The problem becomes, like I said, if the US market starts to move lower, I think that will drag India down as well. But this is sometime in August.
Hi, Mixo. Good morning. Mixo, I wanted to ask you about a couple of other two key variables from an Indian equity perspective. One is the dollar index. That's cooled off, which is good for emerging markets and obviously India as well. Where do you see that one headed? Because it's collapsed and that's pretty good news. And also Brent crude prices being a little bit stubborn. It's moved to around $81 per barrel. These are very important points, both these two, from an India market perspective. How do you see that panning out?
Yeah, unfortunately, both of these are probably a little bit of bad news for India market going forward because JP Morgan's house view on the dollar is that the dollar strengthens in the second half of this year. That obviously hasn't happened so far because the inflation print has been softening. But like I said, if inflation starts to rise again and the Fed moves towards more hikes rather than less, I think the dollar index will start to move higher also. That having said, specifically for India, this is probably a little bit less of a concern than it would usually have been, because what we're seeing this time around is that the dollar moves are happening more against lower yielding currencies rather than higher risk or traditionally seen as higher risk currencies. So a lot of the currencies that were very sharply depreciating in 2013, the taper tantrum or several other risk episodes that we've seen over the last several years, they are very resilient. On the other hand, currencies that are lower yielding, like in China, in Taiwan, in Japan, these are the currencies that are depreciating the most against the dollar. And our expectation is that if the dollar strength that we will see in the rest of this year is probably going to continue that sort of momentum. So INR as such, it probably is going to be weaker, but not that much weaker against the dollar. On crude oil, yeah, again, our expectation here is that oil prices are biased upwards. The market supply demand is moving into tightness over 3Q and will remain tight into 4Q. Our expectation for U.S. economy to go into recession is really a 2024 story. So over the rest of this year, you'll probably see more upside in oil prices.
All right. I just had one final follow-on question. What stayed with me in this entire discussion, Mixo, is you saying that out of the $17 billion that came in from April into emerging markets, a large chunk of that, actually most of that came into India. Do you see that disproportionate amount of money continue to come into India for the rest of the year as well? And would it be a preferred pick?
So the thing is, on a structural basis, investors definitely prefer India, and that continues to be the play. But a lot of the inflows that has been coming into India has been because China hasn't worked. And as long as China continues to not work, that will probably remain the case. But our expectation is also that once you get into later this year, sometime in 4Q, the China market, for various reasons, will start to work. And we'll start to see that market pick up steam from there going into 2024. And at that point, I would expect that the foreign inflows into India will start to slow down and, investors will diversify into China as well.
Mixo, we'll leave the conversation here. Thank you very much for joining in. Need to get into a break. We'll come back and get you our list of top stocks to watch today. Stay tuned.
Welcome back to Bazaar Morning Call. So we're beginning the day with a lot of individual stocks to focus on. So let's start very quickly. First up, our research team is joining in for the day. Wipro, of course, will be on our radar after the numbers were weak. The revenues were down almost 3%. And compared to peers as well, right, Rima? Numbers were not too good?
No, so the numbers are not very good. As you pointed out, the constant currency revenue growth this quarter has fallen by 2.8%. We were anticipating a drop, but the consensus expectation was that revenues will fall by 2.2%. So this decline at 2.8% is at the lower end of the company's guidance and slightly worse than what the street was anticipating. Also, the performance is worse compared to what peers have reported. That's TCS and HCL Tech over the last 2 days. The guidance for the next quarter at -2% to +1% indicates that even the next quarter is going to remain muted. And another indicator of the moderating demand or slowing growth is also what the company is doing. They've deferred the compensation. Typically, hikes are announced in September, but this time they've deferred it by a month, or even the headcount. The headcount this time has declined by 8,000 plus employees, 8,800 employees. And look at the number over the last 3 quarters. So even as employees are leaving, there is natural attrition which takes place. Companies not looking to fill it up. So that's also a bit of a concern. And analysts, just broadly have cut down their EPS estimates by 1.5% to 2%. But remember, the Nasdaq rallied 1.5%. And yesterday, the Indian markets absorbed all the misses on the IT numbers. So even something like HCL Tech managed to close up in, flat. So I guess it's all, probably in the price.
Okay, all right. Rima, thanks a lot for that. Weakest set of numbers are probably in the price. Let's hop across to Vivek. He's joining us to tell us about GMR Power. Morning, Vivek.
Well, good morning. Not a name we discuss too often, but GMR Power and Urban Infra is the company that we are discussing today. A significant order win coming in for the company. So the company subsidiary, that is GMR Smart Electricity Distribution, has received an LOI for smart meter installation. This is for various areas in Uttar Pradesh, and this particular LOI was issued to the company at the conclusion of the e-tender that was floated by the UP Discom. So now the project span of this entire smart meter installation is over 10 years, and the smart meters, number of smart meters is quite significant. The company will install close to 76 lakh smart meters in the various areas of the state.
Okay, thanks a lot for that. So we'll keep an eye out on GMR Power. Well, let's go across to Ekta. She's tracking Spark this morning. Ekta, over to you.
Thanks for that. Well, yes, definitely a bit of negative news which has come in for Spark, because the US FDA has issued a complete response letter, which is basically a number of queries for their drug under development, which is being studied for eye conditions. It is a new drug application by Spark. Now, the complete response letter, which is a set of queries, is due to inspection findings at a third-party API manufacturing facility. They have said that there are no issues with the clinical efficacy or the safety in the CRL, and there is no additional clinical data or trials which have been requested. Spark says they are committed to resubmitting the new drug application with the US FDA. So the key issue seems to be with the third-party manufacturer. You can probably expect some follow-on selling on Spark in today's trade.
Okay, let's move on and talk about Angel One. Tata Metallics both reported numbers post-market hours. Surbhi, how did they look?
Thanks so much for that. So Angel One, it was operationally a strong quarter, but that was largely known when the monthly business updates numbers came in. The numbers were better than analyst estimates, but due to higher employee expenses, the profitability was down. So revenue was down nearly 2.2% on a sequential basis. Employee expenses were up nearly over 60% sequentially, but Q4 of FY23, which was the previous quarter, had a positive impact of 41 crores. So if you add that back, employee expenses are largely in line. PAT was down 17%, came in at 221 crores. The cost to income ratio was higher by nearly 8%, came in at 53%. That is because of higher employee expenses. Now, operationally, the NSE active client share, that was up 120 basis points, came in at 14.3%. And overall retail equity average daily turnover, that was up nearly 200 basis points, so at 24.5%. So operationally, a strong quarter for Angel One. Tata Metallics, year-on-year numbers look good, but sequentially it was still poor, which is quite disappointing. The revenue from operations on a year-on-year basis was down nearly 2.5%. The EBITDA was up 45%, came in at 35 odd crores. Margins came in at 5.4% versus 3.6% same time last year. And PAT was nearly up 3 times, came in at 5 crores versus 1.2 crores same time last year.
Okay, all right. Thanks a lot for that, Surbhi. Well, let's go back to Vivek. He's got some more stocks in the news. Vivek?
Well, good morning. Quite a few stocks on our radar, on the back of news flow that's come in post-market as yesterday. Patanjali Foods, very interesting update over here. The company initially had, come out with an OFS of close to 9%, where 7%, of selling was due to the base size, and another 2% was the green shoe option. Now, the company yesterday has said that due to the increased and very strong institutional demand that they have received, they've decided to not go ahead with the green shoe option and will only go ahead and reduce their holding up to 7% of what they currently hold. Now, apart from that, the derived clearing price too has come in quite above what the floor price of the OFS was. So the derived clearing price is at 1,103 rupees a share, and retail investors today who will be able to participate in the OFS will have to bid about this particular price to be eligible to get allotment as far as the OFS is concerned. The other stock that we're tracking is CSB Bank. Yesterday, one shareholder, that was Omar's Administration Corporation, in block deals, both NSE as well as BSE, exited the entire 2.1% stake that they held in the company. The price was done at 295 rupees a share. Watch out for TTK Healthcare as well. The promoters who are looking to intentionally and voluntarily delist the company have increased, the offer price for the delisting. And lastly, JBM Auto, significant order win coming in over there. 5,000 electric buses across various state transport utilities. And, that stock too is expected to open in the green today.
Okay, we will be talking more about JBM Auto on the back of that order win. It's a big order for them. They will be supplying buses to various STUs in Gujarat, Haryana, Delhi, Telangana and Orissa. So it's a massive order for them. But let's move on and talk about ONGC and why it should be on your radar. Sonal is here to give us the lowdown. Sonal, over to you.
Good morning, Sonia. Well, ONGC is on our radar because oil prices, they are nearly at 3-month highs. We've seen continuous price increase when it comes to Brent crude. Prices are higher after US inflation has eased. Additionally, dollar index is at the lowest level since April 2022, and weaker dollar makes crude cheaper for the holders of other currencies. So that's why so much buying that we are seeing here. In fact, Brent crude is up around 11% in last 2 weeks itself, up above that $80 per barrel mark. Additionally, OPEC released its report where they see 2024 demand growth of 2.25 million barrels per day, which is up 2.2% YOY, and it's double of what IEA is estimating as well. And they've raised 2023 demand growth forecast by 90,000 barrels per day. So some positive commentary coming in here as well.
Okay, all right. Thanks a lot for that, Sonal. Thanks all of you all for joining in and filling us in with the list. Well, let's do a quick recap of all the top stocks that we just told you about. Stocks with positive news flow include Wipro, GMR Power, and Urban Infra. You have Angel One, Patanjali Foods, CSB Bank, TTK Healthcare, JBM Auto, and ONGC. Well, a couple of them will be reacting to negative news. That's Spark and Tata Metallics.
Get into a break on that note. On the other side, we'll get chatting with Nishal Maheshwari, CEO of Institutional Equities and Advisory at Centrum Broking. Stay tuned.
Well, welcome back. Well, let's get straight to a big conversation that we're getting in from BSE MD and CEO Sundaraman Ramamurthy, who told CNBC-TV18 that the sensex 30 derivatives are seeing good traction. BSE had recently relaunched sensex derivative contracts in an attempt to gain some market share. Remember, the sensex 30 derivatives, well, they're made up of 30 of the largest and most actively traded companies on the BSE. Let's hear them out.
We just started on May 15th. It's around 8 weeks now. When we started with a volume of around 50 crores, around 8,000 and odd contracts with around 20 members participating. We have been talking to members, to the dealers and to the investors about this product and how it can be a good complementary product and how it will be able to represent the entire broad basing of the capital market and how it could be a useful product to trade. 30 stocks, so it is very fast in incorporating the price sensitive information, so gives a lead lag effect with nifty. All the good things about the product we have been talking to the people. I think that has been very helpful in spreading the message of sensex derivatives. Today we are proud to say we are having more than 200 members in our system. Order is an important component of software providers in the market today. So I think this will broad base more. Today I talked about 200 being already in. We feel that numbers will grow more because if it is in the same platform, all the exchanges and all the products are available, it becomes easy for market participants to trade those products.
Okay, another big stock to watch today would be Wipro. Definitely reported a weak set of first quarter earnings in line with CNBC-TV18's poll. The constant currency revenue growth contracted by 2.8% on a quarter-on-quarter basis. This is at the lower end of the company's guidance. In fact, we spoke to the management of Wipro on different demand trends, the outlook for margins going forward. Listen into what they had to say.
The reality is that we continue to have a market where there's a demand for technology, where we have deals, where we actually sign more large deals than we used to sign in the past, and also a market where there's a reduction of discretionary spend across industries, in my mind. Now, with some industry probably more impacted than others, the banking, financial services sector, the communication sector, the technology industry, certainly. So I'm not sure Rimai would necessarily say that the market is worsening. I think we continue to be in this market where there's a certain level of uncertainty that drives some of the behaviors of our clients to be a little bit cautious when it comes to discretionary spend. The nature of a slightly more volatile market is that decisions can come at any moment in time. The reality is today we are not necessarily seeing it, but we are not equally seeing any deterioration of the situation. It is more or less the same market that we have seen for the last, I would say, 3 to 6 months.
It was operational improvement that drove the margin performance, where we kept margin very stable even when we had a certain amount of softness in the revenue, and in fact improved utilization, improved overall execution of our projects, and so on and so forth. So we do have sufficient levers that one can continue to engage in to deliver a stable performance around the range that we operate in.
All right, that was the management of Wipro. But let's get chatting with Nishal Maheshwari, CEO, Institutional Equities and Advisory at Centrum Broking, who joins us on the show. Hi, Nishal. Good morning. Thanks so much for joining in. Well, we've got a couple of IT numbers that have come in. And yesterday, at least the street digested HCL Tech as well as TCS numbers very, very well. Wipro's numbers are disappointing. The outlook as well is a little bit weakish. And as Rima told us, the employee count as well has fallen down. How much of it is in the price? How would you approach the stock from here on?
So, morning, Nigel. I think all the three are disappointing results, actually. I think, and the guidance is also 6 to 8%. If I remember it right, basically, yes, it has been discounted a bit. But I think initially when most of the analysts were on the street, they were guiding they were projecting something like a 9 to 11% kind of a number. Now, I think that is downgraded to 6 to 8% kind of a number, and we have to see by the end of the year how we really pan out. I think most of this was already priced in, except for, I think, HCL Tech. Even I think Wipro is a bit disappointing than what the market was expecting. What I see here is basically yesterday's reaction is that people are trying to find out, given that the market has run away, what has not worked, what has not run away, and obviously if you look at the stocks, balance sheets, management, top quality, all of them. So I think there are people who are trying to find bargain bets in this market. So that's why you saw this kind of buying coming back.
Nishal, morning. What about Federal Bank? The numbers were okay. The loan growth looks strong. The deposit mobilization has been very robust. The only chink in the armor was the contraction in the net interest margins by 15 basis points. And the stock sold off 5.5%, though the management has guided for a NIM recovery, a margin recovery immediately from Q2 onwards. So the stock fell 5.5%. Would it, make the stock attractive post the correction?
Definitely, Rima. I think very strong numbers, and I think maybe a bit of miss on the net interest margin. But I'm saying they have been doing very well in the last 4 to 5 quarters, and they have been guiding pretty well. Even for the current year, they have guided 20% plus kind of a number. So I think it's any fall in Federal Bank is a buying opportunity.
Okay. Nishal, hi, good morning. This entire electric vehicle space is just zooming, right? I mean, we just heard about JBM Auto bagging a big 5,000 EV bus order. Then Olectra Green Tech is now in a league of its own. In this entire space, both from the frontliners as well as the broader markets, what tops your list now?
Morning, Sonia. I think as far as OEMs is concerned, I think there is only Tata Motors. They have done pretty well basically in the OEM space. So especially in the car space. So I think Tata Motors is up there as far as electric vehicles are concerned. But I think more we have to look at the auto ancillaries more basically, because there you really find a lot of plays available. So whether it is Sona, Koyo or JBM, I think there are a lot more plays as far as auto ancillaries are concerned in the EV space. So we prefer the auto ancillary space rather than playing the OEMs. So some of the names which I have given are there as a topic for us.
All right. Nishal, what about a couple of these new listings, Idea Forge as well as Cyan DLM? Both of them have moved just one way, rocket upwards. What's your view on those names from here on at these prices? And also, if someone had it, what would you recommend? Book some profit or continue to hold on to them?
So, Nigel, we were not the bankers to both these issues, basically. So, we have not done much work. So, hard to say for me, actually, to take some profits or not. Yes, stocks have done pretty well. So, I'm saying the natural instinct is to take away some profits. But sorry, I have not done much work to really say with authority whether to take up profits in this or not.
Nishal, have you looked at the entire space of smart metering? Stocks like HPL Electric, Genus Power, they've been flying. Genus Power got into a very large contract or a partnership with GIC as well. Today, we've got news that GMR Power, a subsidiary of GMR Power, has also got an order to install some more than 7 lakh smart meters. Is this space in a structural up move? Because stocks have already run up. Is there, are there more legs to run? And which stock would you bet amongst all of them?
So, Rima, I think we need to understand this space. Basically, the consumer is only government. So that is the only issue which I see out here. There is a long runway. I believe basically it's like multiples of whatever we are producing or have installed today. It is like multiples of that basically. So there's a huge runway for this. The only issue continues to remain basically that most of these consuming are state electricity boards who have got an issue about payments. Most of them are running into losses. So that is the issue basically which I see in this space. And that's why you don't see that the whole market is very gung-ho on this space. Yes, the stocks have done very well, basically because they've got orders. But historically, we've seen, I think, challenges on payments, challenges basically, challenges on profitability. So I'm saying that is where the issue remains as far as this metering is concerned. But yes, I agree with you. It's a long runway. The only challenge being the government. So it is something like what you see mostly in the road companies and all. So you will get a certain multiple, but nothing beyond that.
Okay. Nishal, do stay on. I just want to quickly run our viewers through some of the important brokerage commentary that's come overnight. So let me start with Jefferies and Cholamandalam, where they've raised the target price to 1350 with a buy call. So significant upside from current levels. They see more upsides in the stock as it transforms from primarily an auto NBFC to a more diversified NBFC with multiple growth drivers that could make the company emerge stronger and less cyclical. The NIMs also, the net interest margins, according to them, are likely to bottom out. Federal Bank, the stock of the day yesterday, was down 5.5%. Morgan Stanley has an equal weight rating on Federal Bank. They believe the stock is currently not expensive, but it lacks a catalyst. So they have an equal weight rating on the stock and they prefer other private sector banks, their peers, because they believe the stock currently lacks catalyst. The miss in the numbers was the margins, because margins in Q4 had contracted 16 basis points, and yes, in the last quarter, in Q1, it fell another 15 basis points. They believe the NIMs are near trough levels, but the recovery will be gradual. Quickly run you through some of the other brokerage views on Federal Bank. Citi has a target price of 160, Investec hold rating, target price of 150. So broadly, I think the target price amongst the brokerages is closer to 150. And finally, Wipro. We spoke a lot about, Wipro, and we'll hear the management as well. Brokerages are disappointed by the earnings print. Morgan Stanley has an underweight call. Jefferies has an underweight call. Bernstein has an underperformed rating. Nomura is the only one which is neutral on Wipro post the numbers.
Okay, well, that's on Wipro and all the brokerages over there. But, let's just get our conversation going with Nishal yet again on a couple of more stocks. Nishal, I wanted your thoughts on some of these platform companies. Zomato has come back in a big way, and this year it's already up about 40%. Has that excited you? Not just Zomato, but even, some of these other names like Paytm, etc. And if yes, what would your pick of the pack be here for the rest of the year?
So I have been maintaining my view basically that the two spaces which excite me are obviously is the takeaways, which is Zomato and Swiggy. And my logic continues to remain there basically that both of them have spent close to around, I think if I'm right, close to around $5 billion each to reach this space. Now they are a duopoly. So challenging them now, basically somebody has to spend that kind of money to reach here. So I think this is a space which they have created, and I think it's got a long way to go. It will challenge the QSR model of the restaurants and everything. So I'm saying that this is a space basically which I'm very excited about, and I continue to believe as they get their profitability right, they have a long way to go. The second one is the Policy Bazaar. I think that's another space basically where they have created and has got a long lead over others. Where they have been able to create a very good platform for selling insurance, which is another very strong product. I think that's the first product which you've seen basically as far as fintech is concerned, which has been very successful. So I think these are the two places which I like at the moment. Paytm, I am not as sure at the moment basically how their business model evolves and what kind of competition they are going to face as they scale up. And what kind of margins, profitability, I'm still not sure about that. So I believe the Zomato and Policy Bazaar are the places basically I would put my money on.
Okay, all right, Nishal, stay with us. We'll slip into a short break. Before we do that, let's tell you what's lined up for the next half of the show today. Coming up next, Anuj Singhal will join in for a trade setup. Post that, we'll bring you the top picks for the day from our technical and F&O experts. And later on, we'll decode the stock rally with our Momentumizer segment. And before market opens in CNBC-TV18's Stocks Board, we'll highlight the top stocks in news for the day.
Welcome back to Bazaar Morning Call. As we begin the day, the hurdle definitely is the 19,500 mark, but the global cues are not too bad. Anuj is joining in now for a quick trade setup. Anuj, how are you feeling about the markets today?
Well, Sonia, the global cues are strong, and of course, the dollar index is the one which stands out. That should lead to perhaps another set of big buy number from FIs. But our markets have been charting their own chart, of course. They didn't really participate in global weakness. I think what was really interesting yesterday was the way banks behaved, and within that, Federal Bank, after the numbers, look at how it ended at the lowest point of the day. And what was even more interesting was the futures data of Federal Bank. I've not seen this kind of build-up in a single trading session in a really long time. Okay, I think the data has been nullified, but almost 4 crore shares were added in open interest yesterday, and that led to overall open interest of about 16 crore shares. And not just that, if you look at what Nifty PSU Bank Index did yesterday, because of the scare that you got from Federal Bank, there was a collapse in the Nifty PSU Bank, and that led to the sentiment getting weak in the broader market overall. And the Nifty Midcap Index, which sort of reflects the market's inherent strength, that was the index which actually collapsed and ended at lowest point of the day. Bandhan Bank's numbers today, the stock's been very weak, so perhaps that trend continues. But really, the big risk was last quarter, and by last quarter I mean Q4. Was Q4 peak in terms of earnings for banks, which is the leading sector for the market? I think let's wait for the bigger numbers to find out if that is the case. Ex of banks, the market's quite okay. The closing was good, and especially for IT, it's shown signs of a clear-cut bottom. In fact, look at some of the delivery numbers yesterday in IT stocks. Infosys led the charge, of course. 850 crores of delivery buying in Infosys, 350 crores of buying in TCS, and even HCL Tech from lower levels actually saw quite a bit of recovery. And now the chart that I want to focus on is the Nifty IT technical chart. Now, this is very interesting. Now, this, remember, was an oversold market. Now, what Nifty IT is doing is not just is defending 200-day moving average, it's also defending 20-day moving average. Yesterday, in fact, it bounced back right from the 20-day moving average, and it's about to take out this swing high, which can be very interesting. Of course, this was the whole decline of the IT index. It's almost about to sort of reclaim that despite bad numbers, which I think is good news if you are a bull. Now, that's, of course, about the IT. Let's talk about some of the other things in terms of leadership. Why I'm focusing on IT is, again, because of the global cues. The US inflation print means that there's a clear chance that the US Fed might pause. And if that happens, that leads to a valuation uptick in IT stocks. Even if the numbers do not rise, just the valuation uptick should be enough to carry these stocks forward. I think that's something which the market is trying to price in. Now coming to outlook for the day, well documented that you've been struggling at 19,500 to 19,600. 4 out of 5 days the market's gone there and has retreated from here. But the basic texture is still buy on dips. What you need is a close above 19,550. If you do that, that would lead to short sellers getting trapped and the call writers getting trapped, and perhaps take the market to 19,700 to 19,800. That's the 19,500 call where you've seen such huge open interest build-up of about 75 lakh shares yesterday. Let's see if we can take out 19,550. The Bank Nifty, that's a shade weaker than the Nifty, of course, but the Bank Nifty is now testing the 20-day exponential moving average. That's placed at 44,550. Normally, the first test is defended. So let's see if you defend that. If you break that, the Bank Nifty becomes weak. But if you can somehow defend that, then I think the Bank Nifty could again restart its move. But as I said, right now, IT is looking slightly stronger than the bank.
Okay. All right. Thanks a lot for that, Anuj. Well, let's get in some technical calls as well. Mitesh Thakkar and Shrikant Chavan as well join in. Good morning, gentlemen. Hope you're having a good Friday morning. Mitesh, what about the index? Yesterday we were talking about the Nifty. Well, it's getting a little bit fearful of heights, that 19,500, 19,550. Every time we go there, we see some bit of selling. How would you approach the index? Closer to around 19,400 this morning?
Morning, Nigel. I think, yes, that remains a big worry. Not being able to get past the level on multiple occasions typically does lead to a failure, and some kind of a profit booking kind of movement can happen. Now, clearly, therefore, we need to identify what is the reversal level on the downside. To my understanding, 19,340, 19,380 is that range. In case we start trading below that, I think a minimum of a test of 19,200 could occur, and below that, I think the correction could become severe. So while it doesn't look very damaging right now, but I think there's that tad bit of a worry given the fact that we are time and again failing to sustain about 19,500, 2025 zones. So one, either we cross that, then I think we'll have a fresh bout of momentum. Two, I think we'll start trading below 19,350, 340, and that could lead to another 150 odd points of profit booking. So I think idea is that don't be very aggressive right now till we see a break above 19,520. And in case there's a decline, I think then 19,200 will become a great entry point for short-term traders as well as medium-term traders.
All right. Shrikant Chauhan is also joining in. Shrikant, how are you feeling about the market? Do you think at some point in time this 19,500 level could be taken out through the day, or would we have to wait longer? And what are the stocks to look at?
Yeah, good morning, Sonia. I think, see, the markets are approaching to critical levels of 19,500, 520, and most of the time, whenever the market reached to those levels, we saw some good amount of profit taking. So it happens, like whenever there is a good amount of rally, the market consolidate in a broader range, and it confuses to breakout traders. So it is better to take some contra trades close to 19,500, 520 levels with a stop loss at 19,570 or going short. And in case if there is any decline in the market, then till the markets are not breaking 19,350, we should act on the long side with a stop loss at 19,350. So only on the dismissal of 19,350, we can expect some correction. Otherwise, I think stock-specific action is going to stay there. And I feel that till the demerger of the Reliance, I think the markets are going to spend more time in the range. But yes, for the Bank Nifty, it is failing to cross the level of 45,000, which is little bit worrisome. And on the downside, 44,500 is the support area for the Bank Nifty.
Okay, Mitesh, what would your stock calls be for the day as the markets continue to grind in this range?
Morning, Rima. I have a mix of buy and sell calls today. On the buying side is Info Edge and TCS. So clearly Nifty IT is an index which is showing some momentum. So I've tried to identify long side on the IT stocks. So Info Edge is a buy with a stop below 45.90 for targets of 4,700. TCS is a buy below 3,315 for targets of 3,400. And on the selling side is Balrampur Chini with a stop at 381. Look for targets of 360 here on the downside in short term. And Ambuja Cement will trigger a negative signal if it starts trading below 414. So sell below that with a stop at 420 half for targets of 4.
All right. And Shrikant, what about you? What would your stock ideas be?
See, like as Anuj said, I think Nifty IT index is showing a lot of strength and it is forming some inverted head and shoulder pattern, which indicates that bullish consolidation is happening. And on the dismissal of 30,500, we can expect a good amount of rally. So till the Nifty IT index is below 30,500, yes, we are going to see some consolidation. But in case Infosys announces number as per the expectations or a little bit above the expectations, then it will give a big booster to the overall IT index. So that's the overall view. But in that, we like mid-cap companies and we like LT Infotech Mindtree, which is currently around 4,900. There we feel that it has formed a specific bottom at 4,800. So 4,800 should be the stop loss for creating any long positions. We are expecting LTIM to move towards 5,000, 5,050. And the other stock which we like is from the metal basket. There we like Hindalco, which is currently around 435. There we are expecting 450. We can keep stop loss somewhere close to 424.
Keep your eye on all commodity names today, metal stocks, with the decline that we've seen in the dollar index. And LTI Mindtree, remember, a stock that he likes, Shrikant likes, reports numbers on Monday. Get into a break. We'll come back with the pre-opening rates. We'll also be joined by Kumar Rakesh of BNP Paribas to discuss the results of the IT companies that came in over the last couple of days.
Welcome back to Bazaar Morning Call. Well, we're just about getting the pre-opening rates in now. So the Nifty is indicating that the start will be in the green, marginally in the green actually. The index is up about 54 odd points. And a lot of individual stocks in pre-opening, Hindalco, Cipla, JSW Steel, Tech Mahindra are all trending in the green. So it looks like the market has a good thing going for itself. There's a bit of a recovery in the rupee as well. 82.07 was the close yesterday. I think it's opened at about 81.94. So a little bit of a recovery is what you're seeing flow through there. Let's take a look at how Wipro is doing, because that one's, the one that's going to react to its numbers. It hasn't really been Great showing for Wipro today, for the last many days compared to its peers, and this morning as well. Not too much of a move in the stock. But let's get Nishchal Maheshwari back on board. Nishchal, how are you feeling about the banks now? We had federal banks numbers which are not too impressive, but in general, the private sector banks have been doing well. Your thoughts on how to approach it, and what would your pecking order look like?
So we continue to like the banking sector space. I think basically after almost a decade, as I think you have been enumerating at several occasions, basically that I think the balance sheets are clean. Most of them are fairly well capitalized. Economy is doing well. So I'm saying it's a perfect condition for banks. So maybe this quarter may be a bit weak because of costs going up and all that. But I continue to believe basically that a 15% kind of a positive number basically as far as credit growth is concerned is most likely to happen for the sector itself. Among the large cap banks, we like ICICI, HDFC and Axis in that order. And among the mid caps, basically our order is Federal, CUBK and Ujjivan. So this is the way basically we look at. And then on the NBFC side, basically we like Shriram, Cholamandalam and MMM Finance. So this is the way basically which we like the whole space.
Okay, all right. Initial request to stay with us. Hormuz joins us to talk about a stock that he's been tracking because it's got some momentumizer, and that's why it's featuring in our segment. Hormuz?
Morning, Nigel. And Premier Explosives is the stock that I wanted to talk about. The stock is now up for 7 straight days now, during which it has gained almost 70%. Now, if you see on a YTD basis, the stock would be around 75-80% odd. So most of the gains that the stock has seen this year has come in the last 6 or 7 trading sessions. But price action aside, the real activity is in the volumes. Now, yesterday, Premier Explosives had around 12.5 lakh shares traded, but it's a stock for its average daily volume is only around 8 to 10,000 shares. So over the last 6 sessions, the stock has had 27.5 lakh shares traded, which is the combined volumes of the last 210 trading sessions combined. So it's, if you see on absolute terms, it's almost 7 months of volumes in just 6 trading sessions. Now, the recent surge has taken the stock well above its 50, 100, 200-day moving averages. At the day's high yesterday, its market cap was well around 800 crore rupees. The start of the week, it was around 450 crores. So it has added around 300 crores to its market cap this week. But it's been in the news as well, right? This week, it won an order worth around 550 crores from the Defense Ministry. Just a few days prior, it had won 2 separate orders, one from the Defense Ministry and one from Bharat Dynamics. And last month also, it had won orders from Bharat Dynamics and Larsen and Toubro. So Premier Explosives is the momentumizer. Quite an explosive rally, I must say.
Indeed, Hormuz, you know, many years ago we had covered it on the channel that the larger competitor, which was Solar Industries, the promoter was Manish Noval. He had gone ahead and bought a small stake in Premium Explosives. This is 5-6 years ago when Sonia used to do the closing show at that point of time. You know, we had covered this. And later on they sold it. So the market cap was much smaller out there. And clearly these orders they've been waiting for many, many years. And that's come about. Explains why the stock has been rocketing.
Okay, explosive stock, as Hormuz was saying. Okay, let's get to some more stocks now. In pre-opening, we've settled much higher. So looks like the market is also going to be pretty explosive this morning. It's, you know, expected to be a fabulous Friday, at least the first part of trade. Manoj Muralidharan, Vice President Derivatives at Religare Broking, is with us. Manoj, hi, good morning. How are you feeling about the market now? Do you think there's a lot more upside in this rally? And if yes, what are the stocks that you're looking at that one can bet on today?
Good morning, Sonia. Sonia, I guess this is almost October, November when we have actually seen the advent of this so-called upsurge. So if you ask me on a positional basis, is there more upside? Yes, we believe that, you know, Nifty has a potential of almost 20,200 to 400. Now, this is purely based on some quantitative understanding that we have. But in the short term, at least what we see is the first 2 weeks is usually when you have the trending market for the new series, that is the July contract. And then usually the second or the third week goes into a range-bound session. But yesterday, despite the fall, the Nifty managed to add almost 3.5% more of open interest. And I believe that, you know, the positioning intra-month, because it has exceeded that 1.02 crores, we believe that at least on the derivative side, the sentiment is directly proportional to the position that you have. So 19,500 and 19,600, that's a good call spread we can do. You simply buy a 19,500 call option and sell a 19,600. You can do this strategy for around 30 to 35 rupees. The stop loss should be 10 and we're expecting a target close to 70. Now, having said this, that means that we're expecting the spot Nifty to be in the vicinity of almost 19,600, where there might be some resistance. Needless to say, it's Friday, so usually in the second half, we see a lot of option selling. Now, IT as a sector, I'd like to just comment on that. IT and pharma, these are two sectors where ideally, at least in the last 60 days, which are two contracts, you have seen the rationale of fresh arbitrage come in, where you see the positioning happening in the delivery side of the stocks, and then there is a derivative contract which is usually had. But in the short term, we like ABFRL, the stock has actually seen good cash-based buying at 216. We believe the stock has a potential of 230, so that would be the first stock. And from pharma, I guess Sun Pharma topped the list right from 1020 onward, it has been rallying. But even now at 1070, it's a good buy. The stop loss should be 1040, the target close to 1110 of the stock.
Okay, Manoj, thank you very much for that. Mitesh is back with us for some 9-10 calls. Mitesh?
Yeah. I'll go with the buy on TCS for a target of around 3,400.
Okay. All right, that's TCS for you, target price of 3,400. Another stock we'll be tracking very closely is Wipro. The Q1 earnings were very disappointing. Revenues fell by 2.8%. The company is guided for a weak Q2, -2 to +1%. So in all probability, Q2 is also not going to see any recovery. Growth could even be negative. So Wipro, the earnings are weak. Analysts have lowered the EPS estimates, but yesterday the ADR rallied 1.3%. Let's invite Kumar Rakesh, VP Equity Research at BNP Paribas, on the show now. Kumar, before we get chatting about the internals of Wipro, wanted to ask you, what did you make of the strength in the IT stocks yesterday in the aftermath of weak numbers from both TCS and HCL Tech? What explains the up move that we had yesterday? What have you picked up?
Hi, good morning, Rima. Thank you for having me on the show. I think this quarter, if you see across the companies who have reported results so far, investors have been far more forgiving on slight disappointments in the numbers. And that possibly gets explained by two factors in my view. First is the positioning of investors, both domestic and foreign institutional investors, have been quite bearish for the sector. They have gone significantly underweight over the last 1.5 years for the sector. And that positioning is something is now turning to be favorable for the sector on the margins. The second is getting slight comfort on the macroeconomy side. The inflation data which came in a couple of days back for the US suggested that the Fed policy has started showing results. And the comfort on that is something will definitely help the tech sector and in India, IT services especially, because a large part of the valuation is sitting in the future cash flows. And if the inflation starts coming down and the hope on the interest rate also starts moderating, then that definitely is positive for the tech sector in general. So that too possibly is the explanation why the sector has seen such a strong response despite muted growth and results.
So Kumar, good morning and thanks for being with us. How are you feeling about a stock like TCS now? I mean, in the last 3-4 months, the stock has not done much. It's up about 5-6%. But do you think that the worst of the macroeconomic challenges are behind us? And from an investor standpoint, is the risk reward now favorable for a stock like TCS?
Hi, Sonia. I think these are the times to buy a stock like TCS when the valuation is looking below their 5-year average levels. The outlook from medium to long terms holds very strong, and there are transient issues because of which investors have built a very bearish positioning for the stock. So these are possibly the times when you start adding blue chip names like TCS from a more longer term portfolio building position, and that is what we are advising investors as well, that now would be a good time to start building IT portfolio, and that we could start with a stock like TCS. And more importantly for TCS specifically, in a demand environment where the focus has shifted towards cost optimization, TCS has far stronger capabilities in that area and possibly will continue to gain much higher market share than what it has done over the last year or two. So it could possibly be outperforming on the growth side as well. And that is something which you could see in the order booking, which they have been reporting for the last 2 quarters. The book-to-bill, what TCS has been reporting for last 2 quarters, is among the highest they have reported in the last 2 years. So while the growth is not reflecting those strong order bookings because there is a lot of reassessment on the existing projects going on because of the macroeconomic concern, but as those concerns starts getting elevated, which possibly will start happening in a quarter or two, we would start seeing a much stronger growth reflecting in TCS. And then the valuation which we are looking today will start looking very inexpensive. So TCS, we are quite positive on the name, and it's our sector top pick as well.
Why not Infosys? Infosys trades at a valuation discount to TCS. Its growth rate over the last couple of years and quarters has been more than that of TCS. What are you expecting from Infosys, and what have you made of the spate of resignations that we've had, senior level resignations at Infosys? Do you think in any way it could hamper execution, the delivery in terms of handling the project at Infosys?
Rima, these are large organizations. I do not think that it would be heavily dependent on just one individual per se. And from the sector perspective, the medium to long-term outlook is still quite positive for the sector. And Infosys has very strong capabilities on the digital side. The investments which they are doing on the Gen AI side are also quite encouraging. So from medium to long-term perspective, Infosys continues to look quite interesting. The near-term challenges are, which we saw in the last quarter result, is something as the demand, especially the discretionary spending on the IT has slowed down. That has impacted the company more than what it has done TCS. And that is the reason why our preferred pick is TCS.
Very quickly, we don't have too much time. Do you think HCL Tech's guidance for FY24 is at risk given how challenging the environment is?
So they are quite confident on the pipeline side. The data which they shared on the pipeline, which is up 26% quarter on quarter, 17% YOY, that possibly is giving them the confidence on the recovery on the demand side. Even our expectation is that second half of this fiscal year would be much stronger. The point I was referring earlier, that strong bookings and comfort on the macroeconomy will result into a pent-up demand in second half. And that could possibly help HCL Tech.
All right, that was very quick. Thanks, Kumar, for joining in. I really appreciate your thoughts. Have a great day and a good weekend where we're heading into the market opening. Looks like the bulls are going to have a great day as well. Almost 80 points higher now for the Nifty, inching towards that 19,500 mark. And there we have it, the first tick on the index, 85 points in the green, looking pretty good. 267 points in the green for the sensex. Sensex is now inching towards 66,000, and the Bank Nifty is the one that's also batting for the bulls, 130 points in the green. The big movers this morning are coming in from the IT space. So Infosys is your biggest gainer, up 1.5%, followed by Tech Mahindra. Perhaps the worst of the bad news is largely in the price. You never know, time will tell. But for now, it seems like the case. TCS is once again in the green. And then you have other heavyweights like Reliance, which are making sure the Nifty stays at that 19,500 mark. Reliance up 0.5%. Even metals is not too bad. Hindalco is one of your big Nifty gainers, up 1.5%, followed by a couple of other stocks in the auto space doing well. Hero MotoCorp is getting some of its mojo back. Tata Motors, Bajaj Auto, all trending in the green. So what's not doing well? Power Grid, IndusInd Bank, Bajaj Finance, a couple of the PSUs like BPCL, NTPC not doing that great. Bharti Airtel trending in the red. M&M is coming in for a little bit of profit taking. Well, I guess that's a part and parcel of the move in M&M. It's been very solid. So now some money being taken off the table. But otherwise, solid market, almost a century now on the Nifty, and 19,500 is here. But the important, yet again, with a big question, right, whether we can hold on to this by the end of the day.
Indeed, 6 out of the last 7 sessions, we have visited this mark. Let's see whether or not we end the week holding above this 19,500 odd mark. But there's plenty of stocks in the broader markets that are reacting to news. GMR Power, pull up that stock. I think it was up more than 15%. They've received an LOI for smart meter installation in various parts of UP. That stock, I think it was up 18%. It's locked. 20% out there. So the smart meter play, it gives you smart moves. Just take a look at that stock. Moved higher. JBM Auto, that's the other one that's up more than 15%. The company and its subsidiaries, they won an order for around 5,000 electric buses. So that one as well flying away up close to around 15% as we speak. And a few other notable movers, 2 stocks reacting to its numbers. Angel One, the numbers looked good, but I think the stock is seeing some bit of profit taking. It was down close to 100% in pre-open. And Tata Metallics, the numbers are weak actually on a sequential basis. The stock is more or less flattish. What gives it support is, it's going to be merged into Tata Steel. So that's what supports the stock. Otherwise, those numbers a little bit subpar. Prima, what else are you looking at?
Well, Delta Corp has finally rebounded, right? Over the last 3 days, the stock lost nearly 23%. But this morning, the first stake on Delta Corp is up in the green, and that's up close to about 1.5%. The other one that I was looking at is RVNL. Now, RVNL has won an order worth nearly 800 crore rupees, and that stock is flying in trade. And this, in the last 1 year, in the last 12 months, the stock has seen a gain of 290%. So it's more than tripled in the last 1 year. So that's a stock that we're watching. Federal Bank too has rebounded after the 5.5% knock yesterday. Patanjali Food, which on the first day of its offer for sale, OFS of 7%. So very strong subscription. I think the non-retail portion saw an oversubscription or a subscription of 200 times. And Patanjali Foods today is up close to about 5%. On the losing side, Angel One is down 1.5%. Year on year, numbers are looking good, but quarter on quarter, there is a bit of a slip in revenue. CSP Bank, where yesterday we had a large block deal, today it's a bit subdued in trade. Yeah.
I just want to mention, Nigel was mentioning JBM Auto, and it's now up almost 13% in trade. Of course, this is a huge order for them, 5,000 EV buses that they've bagged across state transport undertakings. The management had guided earlier that they are expecting to receive this big order of 5,000 EV buses. And, in FY23, they ended with margins of around 10 and 10.5%. But they told us in their last interaction that the margins on EV buses is generally about 15 to 17%. So the blended margins are expected to go up quite a bit. And that now it's up almost 14%. So piling on a lot of the gains in trade. So that is definitely the biggest mover. And by the way, the market is also trending higher, 80 points higher now on the index. But let's get to our market master of the day, Sridatta Bhandalwarar, who is the head equities at Canara Robeco Mutual Fund, joins us now. Sridatta, thanks a lot for joining in on the show. Appreciate your thoughts. How are you feeling about the market now? Is this a time when one should be looking to take some profits off the table, or just ride this wave because perhaps there's lots more to go on the upside?
Good morning, Sonia. Thanks for having us on the show. No, clearly. So while the market, like you rightly alluded, there has been a little bit of fronting in terms of returns. There has been a little bit of extra enthusiasm in market for last 2 or 3 months. But it is not without reason this time around. And that's where we are not actually, while in near term, as I said, there is a little bit of enthusiasm. We are not, we continue to be constructive on market. And if I have to actually take you through why do we think that basically one should remain constructive, not necessarily from next 2 months, 3 months perspective, or from next 2 or 3 years perspective. You have to step back and think in terms of what are the reasons why market actually consolidated for 18 reasons for 18 months for first of all. First of all, market actually consolidated for 18 months for a very, very simple reason that for financial year 23, you experienced earnings downgrades of 6 to 8%. And at the same time, you had cost of capital moving against you. Both those key aspects which were actually working against market actually started turning more constructive. I'm not saying they're absolutely positive, but at least they have started constructing far more positive. If you look at fourth quarterly results, this was the first quarter after almost 4 or 5 quarters where you saw upgrade downgrade ratio improving. So earnings clearly are looking like far more resilient. One. Second, your cost of capital equation globally and domestically, we have probably seen the worst of the interest rate cycles. While there will be 1 or 2 incremental interest rate hikes, it's more backward-looking data. Incrementally, the inflation data is telling you that your cost of capital equation has started turning in your favor. So when you look at both those factors, as they have started turning constructive, market has actually reacted to that after a consolidation of almost 15 months. Having said that, when we look at it incrementally from here on, again, the earnings, as far as India is concerned, still remains fairly constructive. You have 13 to 15% earnings projections for next 2 years. And the valuation is broadly in fair zone. And while I would say that valuation still is in fair zone, that is where the structural part of the market comes in, whereby if one looks at where basically the business cycle is in India, where the credit cycle is, where the earnings cycle is, from a 3-year perspective, clearly, in our belief, you are in a business cycle, you are in a credit growth cycle, you are in earnings earnings cycle, and that is predominantly driven by the way balance sheets are likely to reflate, and that reflation has already started, which is visible in the investment part of the market. And as those balance sheets keep reflating, which have been completely cleaned. If you look at bank balance sheets, if you look at the corporate balance sheets, those are clean balance sheets today. As those balance sheets reflate through next 2-3 years, you would experience basically business cycle, you experience job creation, you would experience basically the earnings of the cycle. And when you have that kind of basically equation, whereby you are effectively in a business cycle.
Sridatta, you're clearly indicating that India is in for a very, very good period. So, that's good to know. Sridatta, just coming back to you in just a bit, the markets have gone back to that 19,500 odd. And as we have seen in the last few days, quickly we have given 50 points from the high point of the day. So, intraday chart of the markets, will tell you that the Nifty should come up for you yet again, 19,500 in the first few minutes. And we are dropped 50 points from the top. And just one more stock. Saturn Credit Care, there was 2% equity that changed hands. Ticker team will alert you on that one. The stock is up 9.5% odd. So we'll try to find out who exactly were the parties to this. But that's up close to around 8.5% as we speak. Well, Sridatta, as you're saying various reasons why India will do well from here. And structurally, things are looking up. You all have a new offering, right? The NFO. Tell us more about that. There's a multi-cap, I believe, NFO. What is the target out here? I mean, where will you be deploying this money?
So Canara Bank Multi-Cap Fund is the new offering. The offering clearly is a diversified and balanced product whereby the deployment would be as a category, you have 25% minimum each in large cap, mid cap, small cap, and rest 25% is discretionary. Based on the fund manager's view in terms of where the view is from a contextual perspective. As far as we are concerned, we intend to run this product more broad-based, which means we intend to run this product for next 3-5 years from a more mid-cap, small-cap orientation perspective. So we'll run this product broadly 60-40 as a basket within the 100 rupees allocation.
I was reading one headline, Sridatta. 20 fund houses have raised their cash holding in the first 6 months of the calendar year. And 11 of them have a cash holding in excess of 5%. Some fund houses are worried that even if you raise money right now, how do you deploy it at these levels? I know you're comfortable with India's earnings growth trajectory and the valuations, according to you, as you rightly explained, appears to be fairly reasonable. But could you talk about, the pockets where you think you would be deploying the money raised via this NFO?
Sure. So, Rima, as you rightly pointed out, of course, market has moved up 10-12%. And so to that extent, there is a little bit of upfronting of returns that has happened in certain pockets. But as far as the pockets where we see basically structural opportunities from next 2-3 years and where the money can still be deployed, if one starts extending the view from 3 months, 6 months to a year or more than a year, those areas would be more broadly domestic cyclicals to start with. So your basically financials, consumer discretionary, the entire manufacturing supply chain, the domestic pharma space, the telecom space. These are the spaces where we think that the opportunities are still there. And the other space which gradually is actually turning, at least from valuation perspective to start with, more constructive is IT, while the earnings are likely to experience pain for next few quarters. But as long as US doesn't go into a deep recession, at some point in time, this sector again will become interesting. So those are the spaces which we are looking at in terms of deployment of the money.
Okay, by the way, the market is sort of steady. It's not building on to any of its gains. But the one big trend that we're noticing this morning is that IT stocks are seeing a lot of buying, not just the frontliners like, Infosys, TCS, etc., but in the broader markets, Emphasis, Mastech, eClerx, all of these stocks, Happiest Mind, First Source, are all trending in the green. So that's the million-dollar question. Has the buying in IT begun? Look at Emphasis, up 2.5% right now. But Sridatta, the space that has got the maximum amount of traction this year is autos. If you look at it, not just Tata Motors, names like Bajaj Auto, all up 40-60% this year. Is there more to go, or is this run done?
So auto, clearly, it's again in a positive replacement cycle, most of those companies. And of course, we can't talk about stocks, but the specific stock you spoke about, it is more to do with balance sheet rather than P&L in that particular case. But generally, your volume growth for at least financial year 24 in auto should remain still resilient. Of course, you would have to actually probably, if you look at last 1 year, and as you rightly alluded, you had auto OEMs clearly outperforming the ancillaries. I think the opportunities will again, as time passes, the opportunities will move again back to auto ancillaries rather than auto OEM. In auto OEM, a lot of the next 2 years' earnings seems to be kind of getting captured gradually.
Sridatta, what about the real estate space? I mean, have you all been playing that theme? And there are various ways to play it, right? It's not only the listed real estate stocks. You could play the housing finance companies. You could play maybe a couple of ancillaries out there. What's your exposure?
Generally, we are not a big fan of real estate. And I think the reasons are fairly well known in terms of the challenges of generating free cash flows by these businesses. But we have been generally... the real estate cycle is on the right side of the curve, and we're actually playing through housing finance companies, one, and second, generally building material companies, and third, through cement companies. So all those three basically supply chains, value chains, we are playing as a proxy to real estate through our portfolios.
You said you're bullish on IT, right, over the long term, and you think right now the correction that we've seen over the last few weeks is perhaps an attractive opportunity. What's the thesis that you have over the next 12 to 18 months? How do you see it play out?
We are not bullish on IT, but we think that the earnings downgrade cycle probably is coming towards an end at somewhere probably closer to end. And as far as at least the large cap IT is concerned, clearly the valuations have come to a zone where if one starts taking 2-3 year view, and one knows that this sector over a long period of time has delivered at least minimum 10-12% earnings growth, those valuation points, as far as large cap IT is concerned, have started turning far more constructive. Having said that, still you have challenges. One can't ignore the fact that basically the end markets, which is US and Europe for most of these companies, are still going through moderation of growth, and that will play out time to time, and that's where the earnings, at least the upgrade cycle, is still some time away for this sector, clearly.
Okay, the upgrade cycle is some time away. Got that. Sridatta, thank you for joining in, and hope we see you more often on the channel. Thanks for being with us and giving us your thoughts. Well, okay, that's Canara Robeco. Let's move on now and focus on the infrastructure space. The NHAI ordering activity has been relatively muted in FY22 and FY23, but the orders are expected to rise significantly considering we are in a pre-election year. To understand the key trends, project execution timelines, the heating competition, we're joined by Vinayak Pai, the MD and CEO of Tata Projects, and Nalin Gupta, the MD of J. Kumar Infra. Gentlemen, morning to both of you. Mr. Gupta, I want to start with you, just to put the numbers first on board, right? What has the NHAI ordering activity been so far in FY24? And has there been a rise compared to what we've seen in the preceding years, which was pretty muted?
Well, I would say that there is a substantial ramp up that we should be seeing in FY24. And it would be by around 16 to 21%. That is... to the tune of around 12,000 to 12,500 kilometers. This is mainly on account of the healthy pipeline of projects, increased capital outlay of the Government of India, and focus of project completions ahead of the general elections. So, though FY23 was little disappointing, I would say, in terms of the order inflow, but I think this Q3, instead of Q4, usually we see that the order inflow is pretty high. But my feeling is that due to the elections, this year we should see a good ramp up in the order inflow by Q3 of FY24.
So you're saying, just to confirm, you're saying 12,500 kilometers of ordering has happened so far, or is expected to happen in this fiscal?
It's the execution is expected to be happening because there is already around 50,000 crores of jobs which are already in pipeline. So I think the order inflow as well as the execution both will be seeing a good ramp up due to the coming elections.
Mr. Pai, if you could, give us some insights on what the numbers have been according to you. Do you differ in any way with what Mr. Gupta has to say? And how do you expect the situation to play out in elections next year? Sir, your audio is on mute. If you may just kindly unmute.
Okay. Oh. I don't think Mr. Pai, can you just unmute yourself? I think that'll take some time. Mr. Gupta, okay, so just a follow-up over here. I mean, you were talking about how there's almost 12,500 kilometers of order execution that's expected in FY24. Got that. For your own business, what are the big triggers that you see? I mean, what kind of growth are you looking at in FY24? What is your own order pipeline and how much could you be executing this year?
Well, so Jaykumar, we have done a top line of around 4,200 crore in the fiscal year FY23. And we expect to grow at a CAGR of 15 to 16% on a year-on-year basis, which has been our track record for the last 5 years. We have been growing at a CAGR of 16 to 17%. So I think with the strong order book, with the order book of around 11,500, which was there as of now, and with the L1 of around 4,000 crores, 4,600 crores worth of projects, and there is a good pipeline which is for the projects that we have already bidded. So we expect that surely will be growing at a CAGR of 15% on a year-on-year basis.
And Mr. Gupta, by FY27, you have a target of hitting 20,000 crores of an order book, I believe. How will things shape up with FY27 in mind?
Yeah, so we are targeting at a top line of $1 billion revenue, becoming $1 billion revenue company, and taking the order book to close to 20,000 crore. And I think with the the contracts that we have already bidded for and that we are going to bid in the coming 6 to 8 months time, I think we are pretty confident that we should be able to take our order book to 18 to 20,000 crores.
Okay, 18 to 20,000 crore of the order book, and currently I think it's close to about 12,000 crore rupees. So you also have a vision to improve your margins to 14 to 15% by 2027. Considering that inflation has started softening, commodity prices are on a downtake, do you think you will be able to achieve this operating margin guidance earlier, or you could perhaps even exceed it?
Well, so I would say that we are already at a EBITDA margin of 14 to 15%. And our endeavor is to work towards improvising it. And we expect that by FY27, we should be able to get this margin to around 17 to 18%. So we'll be striving hard to achieve this target.
All right. Hold that thought, Mr. Gupta. Mr. Vinayak Pai is back with us. Mr. Pai, good to have you back. I'm sure we are audible and we're looking forward to hearing you as well. FY23, there were some operational losses that we saw from Tata Projects. How are things shaping up for FY24? Will you turn, will you be well in the black and all operational issues are sorted out?
Thank you for having me on the show. Good morning. And we are going through a sort of transformation in the company at this point in time. Some of the legacy projects on which we had challenges have been completed or are getting completed. So we look forward to better results in this financial year and, sustainable performance in the days to come.
All right, Mr. Pai, so you're saying that things will improve from here on. And from a stock market perspective, though Tata Projects is not listed, you have Tata Power that holds 47%, I think, stake in Tata Projects. So that becomes rather important. So good to hear that you're saying things are getting ironed out and they'll start looking up from here on. Just a quick question. Yeah. Any plans of listing Tata Projects? Have you heard anything on those lines?
That's up to the shareholders to decide, and we'll come back with more updates later.
But is that in the pipeline? Is there some talk on that?
At some point in time, the shareholders will look at what's the right time to do it, and we'll come back on that.
Okay, so this calendar year looks like it could be the right time?
No comments on that.
Okay,
we'll have to check with Tata Power and then they come the next time then.
Okay, we'll do that. But of course, you know more than us, so that's why we're constantly asking you about it. I'm sure the investors are also looking forward to that one. But Mr. Gupta, I wanted to come back to you on, the numbers that you had shared. Just one clarification. You said the order book currently from 11,500 crores is expected to jump to 18,000 to 20,000 crores. By when is that? By FY25, or is there a bigger timeline?
Well, see, if you look at this quarter's numbers, we are already L1 in projects worth around 4,000 crores. So I think which takes my order book to around 16,000 crore, 15 to 16,000 crore already. And still we have a decent 8 to 9 months to go. So wherein I expect that we should be able to reach a order book net of by FY24 March by around 16,000 crore.
Okay. And, there's been a lot of competition in this NHAI bidding as well. How are you looking at that? I mean, are the current levels unviable for bidding? Is it sustainable? And can you break up this order book for us in terms of different segments? How much are you getting from the road sector? How much from the metro?
Well, so on an average, we can say around 50% more or less comes in from the metro sector, and 50% coming in from the other civil engineering contracts, including national highways, roads, flyovers, building projects, riverfront projects, road tunnels. So it's a 50-50 more or less order book that I would say in terms of the top line as well as in terms of the order book.
Mr. Pai, have you seen any front loading of orders ahead of the election cycle? Do you think this time in the last few months, we've seen more orders than we typically see, say, in the comparable quarters of, comparable months of last year? Is there any election cyclicality, based on what we're seeing right now? That's the first question. And secondly, the large spending has been done by, the government. And I think 80% of your revenues comes in from government and about 10% from other Tata Group companies. Are you also seeing increasing bids from other private sector companies? Just want to understand if the private capex is also on the uptick.
Absolutely. I think we are seeing an increase in activity like never before. At this point in time, as per the budget, if you see, the government talked about over 10 lakh crores investment in infrastructure. But if we add to that the state investment in infrastructure as well as the private sector investment, it goes to over 26 lakh crores. And that's, almost more than 9% of the GDP. So the infrastructure is well and truly one of the critical drivers of the economy. We are seeing increased activity. And definitely on the private sector, driven by the PLI and the semiconductor mission and the data centers, those are the areas in which we are seeing significant investment. And of course, also remember that, the infrastructure has a multiplier effect and drives investment in sectors like cement and steel. And, in steel, we are seeing a lot of investments in the private sector. So, we are seeing definitely far more opportunities coming up in the private sector than in the past.
Okay, more opportunities in the private sector. Appreciate your thoughts. Gentlemen, thanks for taking the time out to speak to CNBC-TV18, Mr. Pai and Mr. Gupta. Well, let's do one thing. Let's slip into a short break. The market is still holding up well, 60 points in the green. On the other side, Chandar Agarwal, the MD at TCI Express, will be joining us for an outlook on their business. We'll also put focus on the consumer durable sector in our special segment, Quarter Se Quarter Tak. And to take that discussion forward, we'll be joined by Praveen Sahai of Prabhudas Lilladher. Stay tuned.
Welcome back. Well, the markets are holding in the green, but yet again, 19,500, we went there. We have come off the top. Let's see whether there is another fight coming in there. The bulls will be wanting that to happen. Otherwise, it's getting a little bit exhausting, going to 19,500, 19,550 and seeing a bit of a U-turn. But let's focus on a couple of stocks. TCS Express, well, the stock has been under some pressure. It slipped around 9-10% odd in the last 1 month and around 17% this year so far. Remember, the management earlier indicated that the full year target growth of around 15 to around 16%. EBITDA growth will be around 25 to around 28%. To discuss how the first quarter has shaped up, what's the outlook for FY24, we're joined by Chandar Agarwal, the MD and at TCI Express. Hi, Chandar. Good morning. Thanks so much for joining in. Well, tell us, how has quarter one been so far? Mahindra Logistics, they said not much has changed since quarter four in terms of sentiment as well as momentum. What about you? What's your view?
In silent period, I can't really talk about quarter one, and but I can tell you for the whole year outlook. And it kind of seems to be in order as per our targets. And to give everyone a brief understanding of the the growth cycle that's happened since COVID. So this is based on the GDP growth of India. In 2020, we had a negative growth of 6.6%. In 2021, India had a GDP growth of 8.7%. 22 was 7.2%. And 23 going forward, I don't think more than 6% is what is going to be the growth levels. Now, this clearly indicates that there's a very high base existing. So we had a growth of 28% in 2021, 18% in 2022, 15% in 2023. And I imagine that, if in 2023, it'll be about 13 to, again, 15%. So this year, the high base that we have seen since COVID will kind of start equating out. And this is for the...
Yeah. All right, Chandra. So basically, we have some guidance that we had earlier from you. And as you said, Q1, you're in silent period. But for the year, you're holding on to the guidance you had given us earlier, right? 50 mid-teens growth, as well as on the top line, and EBITDA growth of mid-20s, holding on to those numbers.
Absolutely.
Got it. Any price increases you've taken so far?
So we have started the process. Q1 is obviously, it takes about a year to get the entire effect of the price increase. And that is going on as we speak. There is no change in that.
Okay. Chandra, hi, good morning. Since you're on track to meet your full year targets and you said the demand is also pretty good, let's talk about how much capex you plan to put on board. Because I think your capex was around 500 crores for the next couple of years till 2027. How much have you spent up until now? What will your capacity look like over the course of the next couple of years? And would you want to raise that capex target given how good demand has been?
Yes. So let me start off by talking about the EBITDA level. First of all, this year, we will be increasing it by about 50 basis points for sure. And then based on that, the capex is on target, of whatever we have given out, 500 crores for the 5 years. And this year would be another 100 crores that we would be investing, and we will be debt free still. There's no change in that. And branch expansion will be also, the same way that we've been doing. No change in that. We have recently engaged PwC for, our structuring the entire country branch, basically mapping out the branches and everything. So that's something that we have also initiated. Also the Pune automation will happen this year. So I think pretty much with all the high base and all the the different situations globally that we have been facing, will kind of like start to smooth out from this year going forward.
So your capex target will remain the same, right? 500 crores until 2027. Yes. No change in that. Okay.
No change in that.
Okay. Just one follow-up to that. Your share of new businesses, are you planning to take that up further? It's currently about 15% of your overall business. How much would it be over the next couple of years? And if yes, will a large part of your capex go towards new businesses as well?
So, the good thing is that the new businesses don't require much investment. They work off our existing branches already. And of course, we have to add more manpower, which is going on as we speak. Typically, we add about almost 200 to 300 people every year. And all that is absorbed in the new businesses. However, the new businesses are not capital intensive. And that makes it very highly profitable also. So, with the entire high base now kind of like leveling out, we will see the real growth coming in. And all the new businesses will also be, having a very strong return on capital employed going forward.
Chandra, just wanted to talk about the near term. Has your business been disrupted by the floods in North India? What percentage of your revenues comes in from these affected areas of, NCR region, UP, etc., where we have seen these unnatural floods this time?
We have not been affected at all because, again, the locations where the highways have been like, like they have been disrupted, like broken or, flooded, they're not the main highways. So they're not the, the main link which connects those small towns and everything to the big cities.
So what's been your capacity utilization in Q1?
We have maintained it at about 85%, and we'll increase it to about 85.5% this year.
Chandra, we'll leave the discussion here for now. Thank you very much for joining in. Let's get to our special segment now, Quarter Se Quarter Tak. Surbhi is joining in to take us through the key expectations from the consumer durable companies this quarter. Surbhi.
In Q1 FY24, consumer durable companies continue to see weak consumer sentiment. In cooling products, unseasonal rain, competitive pricing and weak demand environment have all impacted the room AC segment. On the back of this, the industry has seen flattish volume growth in Q1. The month of June did see some recovery in demand, however, that was not enough. Q1 is likely to see single-digit revenue growth for the cooling product companies. Voltas is going to see a slower revenue growth when compared to Blue Star, but both of them are going to see revenue growth in single digits. On margin fronts, RAC players are likely to see margin expansion in the range of 50 to 60 basis points. However, Voltas is going to see a margin expansion of 100 basis points on the back of a lower base. Now moving on to the consumer electrical space. For fans, the older non-rated fan inventory is largely over. But to push the BEE rated fans, companies did offer higher discounts and also cut prices to a certain extent. Despite that, the industry has seen flattish volumes in Q1. Apart from that, Q1 is weaker due to the absence of water heaters. For lighting, B2C has seen a muted growth, but B2B and B2G has seen an order pickup. In Q1 FY24, Crompton faced challenges due to competitive pricing and the revenue is expected to decline 4%. And Havells may also see a flattish revenue growth due to soft summer sales. Operating deleverage in fans and appliances are expected to play out and are going to impact margins for Crompton and likely to see a decline of anywhere between 50 to 70 basis points. For Havells, cables, switchgears and lighting segment are going to impact positively on the margin front, and the fact that they have a lower base will also play out. Now on to the wires and the cable segment. That has continued to see strong demand traction. Industry volumes are expected to grow at 15% growth on a year-on-year basis. Copper and aluminium prices, although have corrected, strong volume growth would still result in a mid to high single-digit revenue growth for the companies. Within this space, Polycab is expected to be a key outperformer, followed by KEI and Havells on both revenues and margin front. Overall, the consumer durable space is expected to witness a slower revenue growth. Commentary on demand scenario, competitive intensity and volume growth will be important to watch out for. All eyes will also be on the upcoming festive season for pickup in demand.
Sorry, Surbhi, thank you very much for that. Across the board, all the companies that she's spoken about, whether they're in the cooling segment or in the wires and cables segment, all of them are likely to clock in a margin expansion, I think barring Crompton, where according to her expectation, margins could come down. But all the others are likely to see a margin expansion. Praveen Sahai, research analyst at Prabhudas Leeladhar, is here with us on the show. Naveen, morning. That's been the big thesis, right? Most of these companies got hit over the last 2 years due to margin pressures as costs started spiking up. And now they're going to enjoy that lower inflation tailwind. Do you think it's all in the price and there is scope for an upside surprise on margins? And if yes, if you could break it up in terms of various segments.
Yeah, good morning, first of all, and thank you for having me in the channel. So from here onwards, if I look at the past quarter, the Q1 was quite soft, especially for products like a fan and the RSC. And now from here onwards, definitely I can say that's the seasonal products which has not done well in the Q1, obviously for the entire year is a risk, especially for the RAC segment, that again we have to look at the fourth quarter of this financial year to bring back the growth momentum. However, the 2 quarters is going to be very soft for the RAC as a seasonal product. Now coming to the ECD, which largely the fan segment, higher inventory level we had seen in the Q1 FY24, and as per our dealer and distributor check, this channel inventory has slowly at the end of a quarter has normalized. So from here onwards, I can see that with the rating norm change and some softness or some correction in the inventory in the channel is expected to do well with the way forward in a year. And also because of the that's cost increase due to a rating change, the players has not able to pass on the prices and not absorbed in the system. That also with the volume will come back. So I'm quite hopeful for especially for the fan segment to do from here onwards, the Q2 onwards, there is some pickup. Secondly, on the cable and wire, as you also mentioned, that's quite a healthy growth in terms of the volume, more than a 15% the players are expected to do in the Q1, and that growth momentum to continue, I believe, in a year to come, because end user industries like infrastructure, real estate, that's doing very well, and the wire and cable eventually expected to do well in terms of the volume, as well as some price correction in the raw material like copper, aluminum. That's also driving the growth momentum to continue. And related to the margin front, definitely we are expected to see, especially in the Havels for a quarter, we are expected to see a good margin improvement, largely because of the cable business. And year to come, their margin to improve from here onwards. The only laggard is the Lloyd, I believe, because the RAC itself not doing well. The season has gone by. Now with their the south expansion, some numbers to come in, but still there is a competitive pricing brings some challenges to them. So in the ECD, we are expecting some margin improvement down the line.
All right. Hi, Praveen. Good to have you on the channel. Praveen, I wanted to ask you about Voltas. You know, RAC, as you said, has been struggling a little bit, and Voltas, the stock is 30% off the top. You'll have a hold rating currently. What are the key catalysts for the stock from here on? Valuations are not cheap, market share they're losing, and margins under pressure. What more can go wrong for them?
Yes, so we are also, out of our coverage. Voltas is, somewhere the laggard, I can say, because the season has gone by in the RAC, and a lot of competition they are facing in terms of the competitive pricing. Even some players has started their assembly unit in the southern part of India. That's again further put some pressure to them in terms of the market share, to maintain a market share from here onwards. So I am not looking at a significant improvement, especially for the Voltas in the next couple of quarters. All depends on the fourth quarter, where if industry to do well, some pickup in the demand. And also, just to give you some number on the RSC, that's the last year 8.4 million units has been sold, and this year expectation was about 9.5 million. And because of the first quarter disappointment, this number is not likely to achieve. And being the market leader, the Voltas, that's definitely they are going to face some challenges. So, and also the valuation 32, 33 times currently trading at. Challenges related to their RAC segments. It's not a, the stock at over here.
So let's talk about some stocks that have caught the fancy of investors, right? Polycab, I mean, that's been roaring. If you just look at the last 1 year, Polycab has gone from 2,100. It's now at almost 4,000 rupees. Do you see more upsides there? Because in your note, I noticed that you've written that this quarter's numbers will be very good. 15% sales growth, margins will improve. So is there more upside for a name like Polycab? Just look at that, the way that chart has moved. Go ahead.
Yeah, you are right. The Polycab in terms of the number, as well as the stock has done very well. And the way forward also, there is a structural story in the cable and wire segment, and being the leader in that segment, Polycab is expected to do well. But I'm not so comfortable on the valuation right now. It's trading at around 32, 33 times of FY25 earning. But again, like this quarter of earning growth of around 23%, we are expecting top line of around 14.5%. And the year is also going to be a similar way they are going to report. But the valuation somewhere is a concerning, I believe, for a Polycab.
On the AC cooling side, what are the volumes that you're anticipating this quarter? And do things pick up? Because this quarter was impacted with the unseasonal rains and the fluctuations in weather. So what's the volume forecast for Q1 and thereafter? How do you see it progress?
So, so the RSC, if you look at for a quarter, there is a degrowth in the northern side. There is a severe degrowth we had seen around 15-20%, whereas southern side it's with the flat. So overall, the numbers, if you look at on the the major companies like a Voltas, a Havells, or Blue Star is quite different. Especially for the RSC, there is a degrowth we are seeing, a single digit of a degrowth, whereas the other cooling space like Blue Star is doing very well in the commercial AC space. Even the Voltas has a contribution to that. They are going to report a growth of a single digit, I believe. And Havells, the Lloyd, well, now they have a venture out in the south. So from there, we are expecting in their Lloyd numbers to double digit of a growth for the quarter. As I said, that the RAC is a quite seasonal product. Q1 is heavy, and that has not done well because of all unseasonal rain, slowdown in demands and all. And the next 2 quarters is definitely not a good quarter seasonally. So we all are looking at now the Q4 for RAC specifically.
Okay, we leave it at that, Praveen. Thanks a lot for joining in. Appreciate your thoughts. Well, by the way, for the market, it is holding, but it's not really building onto its gains. And what's putting a bit of pressure on the market right now is some of these stocks. So HDFC Life, Apollo Hospitals, M&M, a lot of the private sector banks are dragging their feet. So Axis Bank is down about 0.3%. Reliance is under a bit of pressure, down 0.3%. HDFC Life, as you can see, is one of the biggest Nifty losers. So not looking very good at the moment. But let's do one thing. Let us, okay, there's the Senco Gold listing that takes place in just a minute from now. So we'll sort of keep our eyes on that. I think in about 20 seconds, we'll have the Senco Gold listing take place. Remember, for this one, the issue price was 317 rupees. Okay, it's a good listing that is expected. So I guess I can see some amount of cheering over there. There you have it, 40% higher for Senco Gold. It was subscribed by almost 40 times as well. So I guess the listing was expected to be good. And remember, some of its peers in this space, whether it's Titan, whether it's Kalyan Jewelers, have all done pretty well in terms of both earnings. You know, demand has picked up quite a bit. We all know where gold prices are. Senco, by the way, is the largest organized jewelry retailer in Eastern India. So it has a large presence over there. And almost 70% of its business comes from West Bengal itself. So, and gold accounts for about 90% of sales. So it's largely a gold player in the eastern market in West Bengal largely, and doing very well, 40% higher now. So quite a blockbuster listing coming in from Senco Gold. We'll try and get you more details on the new listing and the way forward, but it's listed at a premium of almost 40% on its issue price, 430 rupees now, 440. On that stock. So good listing coming through. We'll get more details on the other side of the break. Mitesh Thakkar will also be joining in for some technical perspectives. Stay tuned.
Welcome back. Look at HCL Tech. After an all-round miss yesterday, earnings cuts of 2 to 3%, the stock is now your top Nifty gainer. It's up 2.5%. Investors are digesting all the bad news and they're using any opportunity to buy IT names. Even frontline stocks like TCS and Infosys are higher in trade. Mitesh Thakkar is with us. Mitesh, I think at 9 o'clock you were telling us that you like TCS. It's moved up close to about 1% now. What are the other stocks and what have you made of the first hour of trade?
I think the important observation for the Nifty remains the fact that, it's again coming off from 19,500 levels. But what I like is Birla Soft buying here with a stop at 362 for targets of 380, while Apollo Hospital is something which is breaking down. So that's a sell with a stop at 5180 for targets of 5030.
Okay, well, let's also talk about individual stocks. Mitesh, thanks a lot for that. Ekta is joining in now. She has Spark on her radar. Ekta, over to you. Okay, well, we'll talk about Spark in a bit. But apart from that, a couple of other stocks that you're looking at. JBM Auto, by the way, just take a look at how the chart of JBM Auto is shaping up. I think it has been one of the big movers this year as well. But this morning, it's up almost about 14%. Just pull up the chart. There's a significant order that JBM Auto has won, and we will be chatting with the management as well, hopefully in a bit. Now, this is a 5,000 EV bus order that they've bagged from several state undertakings. And they had mentioned to us the last time we chatted with them that there is this big order that's coming through. The important bit is we don't know the order execution timelines. We will get to know more about that. But this is a big chunk for them because in any case, they are the market leader in this space. They have about 30% market share in the e-bus segment, electric bus segment. Last year, they were the market leader. The expectation is that things will improve further. Also, the management told us that the margins that they enjoy on the electric segment are about 15 to 17%. And in the traditional business, the margins that they enjoy are about 10%. So the more EV bus orders come through for them, the higher their blended margins will go up. And hence, that's the up move that you're seeing getting reflected in the stock. A couple of other things that I just want to mention is that the growth for JBM Auto in the year gone by has also been pretty strong. There was also a note that we had put out a couple of months ago saying that they are the leading contender to acquire a controlling stake in SML Isuzu. So that's been the other piece of news. But all in all, a good move coming in for the stock.
Okay, that's JBM Auto, the flyer in today's trade. Other than that, you also have some, pull up some other big movers. Okay, I'm being told we're out of time. So we're going to... the inflation data coming out from the US has been lower than expected. So will the Fed stop hiking? Are we in for a Goldilocks period with good growth and low inflation? So coming up on Indianomics, on the other side, Lata will speak with three eminent economists, Jahangir Aziz, Robert Sokin and Aditya Bhave.